Hey, welcome back everyone to The Real Money Pros. I'm your host, Nick Daniels. I'm so glad you're joining us today. We're going to talk about how to evaluate a company to determine if it's a company you want to invest in or not. I'm going to keep it real high level because I don't like getting lost in the weeds myself. I don't like getting buried in the minutia of details and all that. So I'm just going to we're going to look at 3 quick things that you can use to help you evaluate whether or not you want to invest in a company. All right. But before I get into that, I do have to say, keep going to our website, therealmoneypros.com. There's all sorts of information there. It's free for you to use. So take advantage of it. We're here for you. All right, so let's dive into it today. Now, you're going to be seeing a lot of my screen. I'm going to share my screen with you as we talk through these things. But let's start answering this question. Hey, how do you evaluate a company to know whether or not it's something that you want to invest in, a company that you want to buy into? First of all, if you're going to think about investing into a company, I'd say here's the first thing that you need to consider is, do they offer a product that people actually want? If I'm going to be buying shares of a company, it better be a company that offers something of value, either a service or a product that people value. So today we're going to pick on the automotive industry, all right? We're going to take a look at 3 companies, and I am not endorsing any of these companies. I'm not saying that any of these companies are a good investment for you or a bad investment for you. We're just going to look at a few details of these companies, and you can make a decision on your own. Okay, so what's the first company that we're going to take a look at? Well, we're going to take a look at a company called Rivian Automotive. Now, I happen to like the looks of the new Rivian pickup. It's an electric pickup. Rivian is an electric vehicle company, like Tesla is, like Lucid Motors is. But just because they make a cool looking electric vehicle doesn't necessarily mean it's a good company to invest in. We're just going to look at a few things that you should be evaluating when you're looking at a company on whether or not to invest in, okay? I like to look at Yahoo Finance. I like to look at Morningstar.com. Those websites have a lot of great information right there at your fingertips when you're looking at evaluating companies. All right, so first, let's jump at Rivian Automotive. And when you land on Rivian Automotive here at Yahoo Finance, you'll see here's what the stock is trading at right now, $24.92 as of this recording. And right at the surface, here's a couple things that Yahoo's going to provide. They're going to say right now, wow, this is way overvalued, meaning $24.92 a share. You're paying way too much for that. Now, that's Yahoo's opinion, but that's something that you can take into as you're looking at this. One of the things that I like right there on the landing site, though, is volume and average volume. This is telling you, hey, is this stock being traded a lot throughout the day? Why is that an important thing for you to look at? Well, the last thing that you want to do is buy a stock that has very, very low average volume. I've seen clients that have come into our offices. They have these old bank stocks that used to pay a great dividend. Here's the problem. The bank is dying and no one is trading. Like, the volume on that was like 2,000 shares a day. What does that tell you if the volume's really, really low? It tells you, hey, nobody wants that stock. Sure, you own it. You want to sell it. You want to get rid of it because you see the writing on the wall. This company's about to go under. But if there's very, very low volume on that, you're not very likely to be able to get rid of that dog stock. So you want to take a look at volume. So, hey, let's pick on Ford Motor Company. What's their volume? Whoa, check that out. Average volume, 61 million shares being traded a day. That's a lot of volume. Hey, what about Tesla? Let's look at Tesla real quick. We look at Tesla's volume. 84 million is their average volume. So the idea is this. Hey, if you bought Rivian, Ford, or Tesla, and then for some reason changed your mind and wanted to sell them, is there enough average trading activity throughout the trading day that you could dump it? If you decide to dump it for these 3 companies, sure, the answer is yes. You're not likely to be stuck with it. Now, we talked about this kind of overvalued thing, Yahoo's opinion. We looked at Rivian. Rivian, apparently by Yahoo standards, is way overvalued. What about Ford Motor Company? Oh, way undervalued. Does that mean that you should buy them? Does that mean that $13.72 is a really good price to pay? Maybe, maybe not. It's going to be kind of up to you. Let's look at Tesla. Tesla, they're saying, it's a fair value. Well, what is Yahoo basing this off of? Yahoo's basing it off of the trends. So let's jump back to Rivian Automotive. Let's see this screen right here. If I click on this max button at Yahoo Finance, boom, max. This is going to be showing us over the life of this company. It just went public last year. Well, look at what's happened to the share price. Here's their IPO. They launched at like $100 a share. They popped at $172 a share, and since then, it's basically fallen. And where has it been hovering? Well, if we look at it, it's been hovering probably right in this range right here, right in that 26, 27, maybe $30 a share, $28 a share. That's kind of been this average price since right about May of this year. Where does it have room to go? Does it have room to go up? Could the stock increase in value? Maybe, but this is a really new company, relatively speaking, new to the public market. Let's take a look at Ford. Click on Ford. Let's look at the max. Here's the max price, or the max distance, right, of Ford share prices. Man, started off back in 1984 at about $2.71 a share. Peaked, look at this, it peaked at like $31.39 a share, up $32.59 a share back in December of 1998. And since then, it's kind of come back down. And you can see, here's how the share prices have fluctuated over the years since 1984. But if we look at where it is today, $13.72, that's a pretty fair point. Does it have room to go up? Sure, but if you look at it, like, it really doesn't. It kind of is more of a steady eddy. If you think about it, if you were to average this out, kind of a steady eddy. What about Tesla? Let's look at Tesla. Here we are on the landing site. You would just click on max. I want to see over the lifetime of this stock, where's the price been? Well, if you bought in back in July of 2010, you could have bought Tesla at $1.33 a share. Pretty good entry point. But you see, for a long time, it was just trickling along. It really wasn't going very up much at all. From 2010 all the way to 2019, it wasn't doing a whole lot. I mean, it was growing a little bit. You're looking at these numbers. I'm looking at these black numbers here. It's just slowly going up, but you're not really impressed. Like, oh, $1, $2, $2.50, $2.53, 6, 8, 9, 12. It's just kind of this slow grower, right? Until, man, you look here and all of a sudden, right around the end of 2019 and into 2020, boom, we start seeing this rapid growth. This is pretty classic for what you would call a growth stock. Jumping back to Ford Motor Company, you look at this trend. Yeah, it had this huge growth growth spurt. Boom, here's a huge growth spurt for Ford. But then it falls back down. It's kind of like staying like steady eddy right around here. This is what you would expect for a company that's paying a dividend. What's the dividend? Well, that's the earnings that you get out of Ford's profits. And right here, it's showing, hey, forward dividend and yield. Right here on this summary page at Yahoo Finance, it's saying, for every share of Ford stock that you own, you're going to get 60 cents per share as a dividend. That yield is about 4.42%. This trend line is what you would expect for a dividend-paying stock. Tesla, growth stock. Where's their dividend and yield? Oh, they don't pay one. Why? Because Tesla's taking all their profits and putting it back into the company. We've looked at kind of the trend of the stock. The stock price. We've looked at trading volume. What's something else that you should consider? Well, the financials of the company. Is it a healthy company financially or not? Now, for that, you can look at Yahoo Finance. There's financials right here. You can click on this tab, and boom, there's all these numbers. But I like charts and graphs. For my mind, it's easier to see. So I'm now going to jump to Morningstar's website. And let's look at the financial statements. Here we are, Rivian. You can see I could go back to this quote right here. It's going to give us kind of that same general information on this landing page that Yahoo Finance does. But when I click on financials, I like these charts. Oh, income, revenue, and net income. You see that right there? Well, net income was negative in 2019. Net operating income, they lost $426 million in 2019. 2020, I like the chart. It got even bigger. 2020, they lost like $2.5 billion in 2020. 2021, how did Rivian do? Oh, they only lost $4.6 billion. Yeah, That's not a company that's making a lot of money. They're negative on net income. What about their balance sheet? Well, they are sitting on a lot of cash right now. If you look at their balance sheet, total assets, right? They've got like $19 million in cash as of the end of the third quarter in 2022. So sure, they're sitting on cash. They can keep operating, but are they making any money? No, they're not making any money. They keep losing money. So the question is, do you want to invest in a company that's losing money? Sure, they're sitting on some cash. They can keep operating, but they keep bleeding money. Why are they bleeding money? Well, lots of reasons. If you look at the automotive industry since COVID hit in 2020, everyone's been hit with supply chain issues. Everyone's been hit trying to produce as many vehicles as are being demanded. Rivian's pre-orders, they've got tons of vehicles on pre-order, but they can't make them fast enough and deliver them fast enough to create a profit. What about Ford Motor Company? Well, let's click on Ford. Look at their financials. Look at their revenue in billions. 2019, right around 160 billion. 2020, a little bit less, right? 127 billion dollars. 2021, they made 136 billion dollars. So far this year in 2022, 151 billion dollars. Yeah, they've got revenue coming in. And if you look at 2021, they got net income in 2021, almost $18 billion. That's a company that's profitable, making money, thus being able to pay their shareholders that dividend, right? You look at their balance sheet, hey, looking pretty good. They're actually sitting on quite a few assets, almost $247 billion that they're sitting on. That looks pretty good. What about Tesla? Look at the revenue. They've actually been making money. A little bit. Look at that little burgundy line, net income. They made some money in 2019. They made some money in 2020. They made some money in 2021. And it looks like they're making some money in 2022. Hey, that's looking good. They're making income. Look at their balance sheets. Tesla, sitting on a lot of assets. $74 billion of cash that they're sitting on. Hey, that's not a bad position to be in. They're a company that's making money. They're sitting on cash. So what does it allow a company to do? If they're sitting on some cash, what allows them to keep operating, keep paying their employees, keep buying materials, keep working on growing their product line or service for you. Those are things that you want to consider when you're looking at, hey, is this a company I want to invest in? What's the trend? Let's just jump back to Yahoo for a second. And we're looking at this screen here. What's the trend? If I'm looking at how that price has behaved, is there room for that company to grow up? Is it a growth company? Or if I'm like Ford Motor Company, because see, like Rivian is going to be compared to Tesla. If Rivian can keep delivering vehicles, get their supply chain issues figured out, keep delivering vehicles and start making more vehicles than what are already pre-sold, then you know what? This trend that Tesla experienced for all these years, steady, just a trickle growth, and all of a sudden, boom, huge growth. Maybe Rivian can turn this around, right? It's a young company. They went public in November of 10th, 2021. They've not been around a long time, just public just over a year. They might be able to turn this around, but how long do you have to wait until you actually see some growth on your investment in that? Well, if it's like Tesla, we're looking at this, man, from July 1st of 2010, really until around, let's say, October of 2019, it was like a 9-year runway before you really started seeing phenomenal growth on your shares of Tesla. Rivian could behave the same. Ford Motor Company, if you buy Ford Motor Company right now, what are you going to start getting? This dividend payment. Every quarter when they pay their dividends, right now a 4.42% yield. That's not a bad yield on a dividend-paying stock. Yahoo is saying it's kind of undervalued, meaning there's room for this price to go up. So if you bought it at $13.73, you're getting those dividend payments, plus maybe the stock pushes more up to like $15, $16 a share, and you got some growth from the value of the shares increasing as well. Things to consider. We looked at average trading volume and how that matters, and we quickly then looked at, using Morningstar, we looked at like their financial statements. Are they bleeding money like Rivian is, or are they making money? Do they have revenue like Ford Motor Company? Those are some simple things that you can look at to consider whether or not you're wanting to invest in a company. Now let's pick on one more because it's just popping in my mind, right? Let's get out of the automotive industry. But what's an example of maybe a company that has a product or a service that might be kind of like going away? But there's a company out there, Lumen. It's a telephone company. Used to be known as CenturyLink, used to be known as another company, used to be known as another company, used to be known as another company. Few people have landlines anymore. Therein kind of lies the problem. What's the goods or service that's being provided, and is it highly in demand? Well, let's pick on Lumen for a second. So here's their ticker, LUMN. And let's just go to the landing page right here. Well, here's the current price per share, $5.86 a share. And oh man, that's up 3.8% today. But let's look at this max. Trading volume, average volume, 23 million shares traded. Well, at least you wouldn't be stuck, right? If you bought Lumen and decided to change your mind, at least there's enough volume that you're thinking, yeah, I could get rid of this if I need to. But let's stretch this out. It looks like back in 1984 would have been a great time to buy in at $1.43 a share. A great time to sell out would have been maybe September of 99 at $46 a share. Maybe you held on to it and could have sold it in 2007 at $49, $42 a share. Man, even if you sold it in 2014, like in September of 2014 at $40.77 a share. But look at this trend now. It just keeps going down, 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 down to where we're trading at $5.86 a share. What's Yahoo say? Undervalued. Yeah, sure, it could go up. But again, is it offering a good or service that's really going to be in high demand in the future? That's going to be a decision for you to make. Let's look at financials. Let's go over here back to Yahoo or Morningstar, because just I like the bar graphs. LUMN. Boom. There's the ticker, Lumen Technologies. Let's click on financials. What is this company looking like? Well, they've made money. They lost money in 2019. They lost a little bit less money in 2020. 2021, they made some money. So far, net income in 2022. Oh, looking at making $2 billion. Well, that's nothing to shake a stick at. They made $2 billion. I certainly haven't made $2 billion this year. They've got revenue. Let's look at their balance sheets. They've got debt and assets. Here we are. They're sitting on about almost $55 billion in assets. Total liabilities, $42 billion in liabilities. That's a pretty heavy debt load or liability load. Yeah, I'm just looking at this saying, man, is that a company that I would want to invest in? Where's the future of landlines and phone communications like that? I look at Lumen Technologies and I'm just thinking, yeah, I don't know that that's really something that I want to invest in long term, because where's the future for that? But there you have it. Just a few quick things that you can be looking at to help you evaluate a company to see whether or not you want to invest in it. All right, that's what I've got for you guys. Thank you so much for watching. Don't forget, visit our website, therealmoneypros.com. Send me an email. Click the Ask the Experts feature. Let me know what you think. I'm here for you. I'm trying to help you out. All right, so there you have it. Thanks again, guys. We'll catch you next time.